Crypto is crashing and everybody is panicking. Everybody tries to figure out what's causing the price decline, who is selling, and whoever that is, will that entity continue selling? Let's have a look at the data most people are not considering. Let's distinguish noise from actual signal. Just this morning, I've read an article how JP Morgan says that it's the retail investor that's selling now, that it's the ETF selling pressure. And yes, the ETF balance is going down, but that's not what's driving the decline. What we see here is the ETF change. And while most of the time the exchange traded funds, so Wall Street, tended to buy Bitcoin, there are certain periods where there's distribution. And since the 5th of November, we do see selling by the ETFs. But really, that's not what's driving this price decline. Bitcoin and crypto as a whole is going down because of the long-term holders. Have a look at this, right? In green, we still have the ETFs. In blue, we've got the long-term holder supply chain. And when the long-term holders are selling, that's when a rally stops. When the long-term holders are buying, that's when a dip is formed. And currently, since Bitcoin hit 105K, the long-term holders are selling, and they do so at an accelerated rate. And that is the problem. That's why we are down. It's not the little bit of price movements due to ETF buying and selling. It's all just the long-term holders. Have a look at the Bitcoin days destroyed. Now this measures what the dormant Bitcoin is doing. So let's say you own one Bitcoin and you're not moving that Bitcoin for 1 year. And after 1 year, you decide to move that Bitcoin. That's when you're destroying 365 value days or Bitcoin days. If you held the Bitcoin for 2 years, that's of course double of that. If you held 2 Bitcoin for 2 years, it's 4 times the destruction. So the more Bitcoin is held and for the longer it was dormant, the more Bitcoin days get destroyed. In other words, this is a measure of what the whales are doing. The investors that tend to hold most Bitcoin and that tend to be the least active. The diamond hands with high conviction. When they suddenly move their Bitcoin, something is going on. And this has recently spiked massively at a similar level to where it spiked at the final capitulation in 2018, when Bitcoin moved from 7K all the way to 3.5K. We can also smoothen this out across 30 days. Again, we are at a historical high. And when we smoothen this by 90 days, we again see a very high level. The short-term holders really aren't doing that much, right? The short-term holders are trading the same way they always do. The long-term holders, they are causing the price decline. They are moving the entire coin days destroyed metric up. Now, why is this so concerning? It's concerning because the selling pressure is rather constant. It's also concerning because the long-term holders hold most of Bitcoin. So the ETFs still just hold roughly 5% of the supply. Michael Saylor also holds only 4 to 5% of the supply. So the vast majority of Bitcoin is still in the hands of the OGs, right? Of the long-term holders, the people that bought Bitcoin very early. And it's problematic that they're selling right now because Bitcoin is not going up. In the past, the long-term holders just tended to sell into a rally, right? For example, here, when Bitcoin moved from $200 all the way to $20,000, that's when the long-term holders were willing to take some profit. That was also true when Bitcoin went from $10,000 to $60,000. That's when the long-term holders sold. And they also sold when we hit the 70K or when we hit the 100K. But this is now the very first time that the long-term holders are selling while the price is not hitting new all-time highs. So this seems like an entire conviction change. In the past, the long-term holders would only sell when it was worth it, right? When there was portfolio rebalancing. Let's say the long-term holder held 10 or 20% of the net worth in Bitcoin. Then Bitcoin doubles and triples. Then half of the money is all in Bitcoin. That's normally when the rebalancing happened. But this time, Bitcoin is not hitting new all-time highs. So the selling by the long-term holders is not due to rebalancing of portfolios. It's maybe selling because of a loss in conviction in the asset. Now, why might long-term holders suddenly lose conviction in Bitcoin? Probably because Bitcoin did not outperform other risk-on assets in the last 5 to 6 years. Right? Bitcoin performed pretty much the same as the Nasdaq 100 did during that time period. But at the same time, Bitcoin had much more volatility. And so when there's still profit to be taken, when the average long-term holder is still in profit, it might make sense to take this profit until we are at lower levels again. Here, have a look at this. This is the Bitcoin price relative to QQQ, so a Nasdaq 100 ETF. And since 20 2017, so for the last 8 years, the outperformance of Bitcoin relative to technology stocks was only 21%, while the volatility was much higher, right? Bitcoin crashed by more than 80 or more than 70% versus technology stocks. So is a 20% outperformance really worth it when the asset can crash that much? In the last 4 to 5 years, Bitcoin even underperformed technology stocks as a whole. And that might explain the loss in conviction. Now, the long-term holders will not sell forever. I expect that the selling will likely stop once they are in aggregate in losses again. So here's the net unrealized profit and loss. And on average, the market is still in 33% profit. The best time to buy Bitcoin, though, is when the market is in aggregate in losses. So it seems like the tops are going down. It seems like the bottoms are going down. And we might still get into net losses until we see a turnaround. Here's an interesting indicator, the net unrealized profit and loss by cohort. When this flashes blue, it might make sense to get back in again. At what price level could that be? Well, the short-term holders, they're already in losses, right? This is the short-term holder cost basis. It's even below 1 standard deviation. So the price has never fallen that much during the recent bull run, right? That started when Bitcoin hit 16K. But just have a look at this, right? Short-term holders can be in much more losses relative to their cost basis historically. We are not yet at the bottom. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. Here are potential supports. There's the realized price. So that's the average cost basis of the entire market. That's currently at $56,000. The true market mean is at 79K, and we did bounce off that support during that bull run. But if we are really turning into a bear market, we are likely going below the realized price again. We also tended to go below the balanced price at the end of a bull market, right? That happened in 2018, the miner capitulation from 7K to 3.5K. It happened during COVID. It happened after the FTX implosion. Currently, the balance price is at 43K. It is very hard to time the market perfectly, but it's comparatively easy to say whether or not we are currently expensive or cheap. And so we can simply just use a rebalancing approach. If we think that the market might be heated, it might make sense to move into something risk off, maybe buy gold, maybe buy treasuries, buy something that's not correlated to crypto. When crypto is very cheap though, we move from the risk off assets to the risk on assets. So here's a way to approach this without trying to time the perfect bottom or the perfect top. We can use something like the CBBI indicator. So that's an aggregate indicator using all kinds of different submetrics, like the Pi cycle top indicator, like the net unrealized profit and loss. But we're also looking at regression charts. We're also looking at momentum via moving averages. We are also looking at trading activity via the MVRV score. And so that CBBI index trades between 0 and 100. Whenever this is high, then of course crypto tends to be expensive. Whenever this is low, crypto tends to be cheap. And instead of trying to buy exactly at the bottom and sell exactly at the top, we could simply just adjust our portfolio weighting. So when we are at 0, it might make sense to be almost 100% in crypto assets. When this is at 100, it might to be 0% in crypto assets. And when we are at 50, we're just 50-50 in crypto and risk off. So we adjust as we move along this line. As we're getting more and more expensive, we tend to sell our crypto. As we get cheaper and cheaper, we tend to buy our crypto. And still, we are at 56, so crypto is comparatively expensive. We might want to hold the majority of our wealth in risk-off assets until we hit levels below 50. That's then where we slowly dollar cost average in again. So that's a potential strategy without trying to time the cycles too much, right? We're just adjusting our weighting within a portfolio. In order to become bullish again, I want to see how the long-term holders start buying again. I also want to see how money flows into the market again. This here is the stablecoin market cap. So whenever you send your hard-earned cash, say from a bank account to Binance, then Binance sends that capital over to a stablecoin issuer, to stablecoin custodian. The custodian holds the funds in a bank account and will then issue stablecoins on the chain. And the stablecoin issuance, that's what we see here on this chart. Whenever money flows from traditional finance into crypto, this is going up. New stablecoins get created. Whenever people withdraw their funds from crypto, then stablecoins get withdrawn. The custodians have to pay out what they're holding in their bank accounts. And so when there's no money flowing into the space, it's very hard for crypto prices to go up. We have seen two phases lasting roughly 2.5 months where we went sideways with the stablecoin market cap. They have resolved in different ways, right? This was the Terra Luna collapse, and then subsequently FTX went belly up, and this was just some apathy in the market. And then meme coin trading on Solana picked up. But now, since October of this year, we don't see any inflows into the crypto space anymore. And that is bad. It's very hard to argue for rising crypto prices when no new capital enters the space. We can also have a look at the stable coins as a fraction of all of crypto, as in how much capital is currently on the sidelines, how much dry powder is there. When the stablecoin dominance is very high, the market is very fearful and crypto prices tend to be low. When the stablecoin dominance is very low, that's when the market is 100% risk on and crypto prices tend to be very high. The stablecoin dominance historically peaked at roughly 16%, and in the last 2 years, we tended to trade in a range between 5% and 9%. And again, there is an inverse correlation here. At the bottom, we see the cryptocurrency market cap except the stablecoins. Whenever there is a lot of risk exposure, when stablecoins have been deployed, the crypto prices tend to be high. When stablecoin dominance is high, crypto prices tend to be low. So there's an inverse correlation. And currently the market is extremely risk off. We're not anymore in the sideways trading range. And so maybe this tends to rather grow over time. So it's hard to say what happens short term. Maybe we do see more money getting deployed again. Maybe crypto prices can bounce from here. But again, I want to see how money starts to flow into the space again and how the long-term holders stop their selling. When this blue area is above the zero line, that's when I want to buy. And that's usually also when crypto prices are still comparatively high. So we are not necessarily late just because long-term holders stopped selling to buy into crypto. There is the risk that stablecoin dominance goes all the way up to 16% again. And that then, of course, would be very bad for crypto prices, right? Crypto might see the next bear market when the stablecoin dominance is at that level again. Now, there's also some interaction between traditional finance and the crypto ecosystem, as in there is correlation between technology stocks and Bitcoin. When Nvidia goes up, Bitcoin tends to go up as well. When the Nasdaq goes down, then crypto prices tend to go down as well. If we work with the assumption that AI stocks are not in a bubble, that we don't see a crash like during .com, that we actually continue to see elevated prices, if that's our assumption, then very likely we're going to see a turnaround in Bitcoin once the long-term holders are not in profit anymore. The long-term holders will stop their selling once they are below the average cost basis, but that's currently at $36,000. We tended to turn around at the end of a bear market whenever we are below that long-term holder average cost basis. And if AI stocks aren't crashing, then this will very likely be the turnaround yet one more time. Of course, if AI was to pop and the Nasdaq was to drop by 60 or 70%, then Bitcoin could go way lower than that and then bring the entire crypto market with it. Really, crypto seems to have matured in a way that it makes sense to time the market. The easy money is gone. We can't just set and forget. We can't just dollar cost average and then hope that within 3 or 4 years we are in profit. No other market works this way, right? When we buy property or when we buy stocks, we need to have a longer time horizon. And it's very likely going to be the case for crypto as well. It might make sense to sometimes take profit if the market is heated. It might make sense to allocate more when the market is extremely depressed. Despite all the positive developments in the last 8 years, with Michael Saylor accumulating Bitcoin, with the ETF acquiring more and more BTC, despite all of that, the long-term outperformance versus technology stocks really wasn't there. So we have to buy whenever we are at the very low point of a cycle. And it seems very unlikely that we are at the low point of the cycle right now. The market is still in net unrealized profit. And so the long-term holders, they continue to offload. Now, if you've been following this channel for a while, then this entire development in the last month shouldn't be a surprise. We were betting on falling prices. I was sharing all my trades in the premium membership of this channel as well. So if it's your very first time here, feel free to subscribe. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.